Ladies and gentlemen, welcome again to the Inevitable Podcast. I'm your host, Pedro Soren. As you know, I'm a VC, author, entrepreneur, and a few other things. But, I'm also the founder and CEO of Atman. We're basically this closed community of founders and investors playing long-term games together. Today, it's a pleasure and it's very joyful to have Elizabeth here. She's a good friend, co-investor, and also the general partner and co-founder at Hustle Fund, pre-seed fund for software entrepreneurs. Before that, when we met, Elizabeth was a partner at 500 Startups, where she was also running their accelerator program in Mountain View, as well as making investments from their other funds. And prior to that, Elizabeth was also a founder. Not that you're not a founder now, you continue to be a founder, but just as of a VC, it's a very entrepreneurial life, which we'll get into. But co-founded and ran an ad tech company called LaunchBit that was then acquired in 2014. And also has a double E degree from Stanford and an MBA from MIT. So very impressive, because I call myself an academic mutt, basically. Just I have street knowledge in terms of venture capital, although I am a nerd and I study a lot, but just found a different path, I think, into our game. But I think you've reviewed over 20,000 startup pitches from all over the world in the last few years, has helped numerous portfolio companies raise millions of dollars. And prolific writer, produced tons of content, published on TechCrunch, Forbes, Huffington Post, and BetaKit. But more than that, it's just I always learn things, when we talk together. And you're one of the very few people in the universe that I appreciate jamming about the nerdy things on VC. So
Yeah.
thanks for being here. Thanks for making the time. It's great to see you.
Yeah, of course. And likewise, thanks so much for having me, Pedro. It's great to chat always.
Awesome. So I think we always like to start here just learning a little bit more about your childhood, right? And we grew up in very different environments, but you grew up in Silicon Valley. How was that like? How was your childhood?
Yeah, so I think it's funny because the Silicon Valley that we see today is very, very different from when I grew up. There were orchards here and apricots and whatever. But when I went to high school was when the rise of the dot-com boom started. And my parents are not entrepreneurs and they're not in tech or anything like that. And so actually,
What did they do?
My parents were professionals. My mom was a doctor, and so very different. And I think she had always hoped I would be a doctor. That never happened, and I think she still asked.
Traditional Asian California family.
Yeah, no, for sure. I think I'm a disappointment, but nonetheless, I think I was very fortunate to have kind of had a couple of serendipitous things happen to me very early on. So when I was in high school in 1996, I was in ninth grade, and that was sort of the beginning of the rise of the dot-com boom. And my best friend in high school, Jennifer, asked me one day if I wanted to go up to San Francisco and help out her cousin Tony just for a little bit with his startup. I didn't know what a startup was, but I also didn't have anything else going on. And so we took the train up there, and we put together some tables and chairs, and actually we even manually put together Ethernet cables, if you can even imagine that. It's the most tedious task ever, but that's another topic. Anyway, what I really learned that day was not how to put together tables and chairs, but it was my first glimpse into what a startup even was. And I was just hooked. I was like, here's Tony and all of his friends, and they were building this company, and there were people constantly coming in and out of this office, and they were doing meetings and like working on their ad network, which is what the business was. And I didn't even know how you made money, but you could eat all the pizza in the world. And that I knew was the dream. So fast forward, this cousin of my friend, Jennifer, he ends up actually doing quite well for himself. This company ends up selling to Microsoft for over $200 million reported value. And he ended up going on to become the CEO of Zappos. Tony Hsieh, the late Tony Hsieh. So, Tony actually had a very strong influence in my life, I think, from decades ago. And then fast forward later would also have some influence during my entrepreneurial career. But if I hadn't met him, I don't know if I would have gotten into startups. I didn't come from a family where that was like the thing to do.
Interesting. Well, there's a lot to unpack there, but starting with that moment, right? It's a clear epiphany. It's funny because I mean, for me, it wasn't it was with a phenomenal person. It wasn't as successful or senior as Tony Hsieh. But I remember the first time I walked into a startup office in Brazil, and you could hear the sound of productivity. So it was one of those quiet offices, everyone wearing their noise canceling headsets, and it's just the clicks and the things, and people were like caffeinated, just getting shit. And I was like, oh, this is cool. Like you really feel like they're just building the future. And then of course that the pizza and the cool aspects of the relaxed environment, right, of startups, they're just very seductive. So I didn't know that. I actually learned about that through the research, before we did before we did the show. So, and I had a chance to meet Tony a few times, not as close as you, and not as early in his journey as you, but it was more through like South by Southwest parties, right? It was a very different context, and we were just but I delivering happiness had a profound influence in my life, and to this day, Zappos is one of the very few accounts that I have that I still use, a very old email that I created 11 years ago, and the service continues to be great. I'm Zappos a VIP, and you call them, they're still the joke of the day. And I actually got a box yesterday from. So I've been trying to buy these boat shoes now with Miami, and then for whatever reason, my foot it has a different shape. What?
You're turning so Miami.
I am pro. Now I have declared Miami is the capital. It's a great place. I'll be back in California in August, and hopefully, I'll take you up on that backyard meal. When that happens, but it's. I mean, the service is incredible. The returns, everything. I mean, the culture. I mean, the positive dent that he made in the universe. And I wasn't that close. I was genuinely sad when I heard that he passed. And it wasn't just the fact that he died. I was sad when Kobe Bryant died because he was an inspiring person. But as a helicopter, crash, like, what are you going to do, right? We're all going to die anyway. But it's like it's tough. It's shocking, but you kind of get over fast. But if it's someone that you've had a relationship with, and it was a slow build up of depression, destruction, enablement of other people. So, I mean, I can only imagine that, like, it was also very tough for you, I suspect, right?
It was really tough for me. But I think now that we are several months past that, it's been great to be able to reflect. And yeah, he really had a big impact on my life, especially around entrepreneurship. So I'm very grateful to him.
Yeah,
Yeah.
I think ultimately it
Before I
leaves.
tear up here on this
No,
call.
I'm sorry. Yeah, no, but just it's important. Someone just leaves like a very positive legacy. I mean, the few times I interacted with him, he was always joyful, and I mean, he had that cool, chilled vibe of I've never been to Burning Man, but that you kind of get out of these burners or just these like Burning Man events, uh, and I think it was a big aspect of everything he did. I remember even when was it a Frog Ventures? What was the name of the thing?
Venture Frog.
Venture Frog, yeah, right. Like, so he made the money right from the sale and then started a VC firm, and that didn't go anywhere aside from Zappos, and he kind of embraced that, right? That was a story, I believe.
They actually had quite a number of hits out of that VC firm, but he ended up, when he went to work on Zappos as CEO, they basically, put that aside.
I see. I didn't know that. I thought okay, great.
Yeah. he was actually quite successful at so many things that he touched, including investing. But I think the two things that really strike me about Tony that's fairly unique from what I see is, one, he was definitely not afraid to have crazy out there ideas that everyone else thought was nuts. I think when you think about Zappos now, like, okay, yeah, they're a big company and they're in downtown Las Vegas, but I think at the time when he first moved Zappos from San Francisco to Henderson in Nevada, which is near Las Vegas, like that seemed like a ridiculous move. That was well before anybody was talking about, oh, you could build a big company outside of Silicon Valley and all this stuff. I think now it just seems normal, but he had the foresight to do that because it made sense for the business and their cost structure. There's no way they could have executed on that business in San Francisco. So he was never afraid to kind of think about things from basic principles. And he did that again, I think, with Downtown Project, where he was, trying to revitalize downtown Las Vegas. And while I think not everything went necessarily to plan, I think that actually was a win. Like if you look at downtown Las Vegas now, it's very different and kind of has gotten jump started from even just a few years ago. So these are the kind of crazy ideas he had that pretty much everyone in the world has always, been against until he proved them wrong. I mean, even Zappos itself as a shoe company, it's amazing that you say all these amazing things about it. I can't really think of many retailers where I feel the same way, right? And so it's not even about the shoes, it's about the experience. And so I think he kind of had this magical way of thinking that I always respected and admired. And the second thing is just plain and simply kindness. He was very kind to everybody. I mean, even though he was like a billionaire, like, or a near billionaire, like, how many people of that level do you know who are really that, constantly that giving and that kind? I think there's certainly some people, but a lot of people don't end up being as kind as they get that wealthy.
I agree. And it's interesting because now with this new chapter with Atman, my goal is to not compromise at all and only bring the Tonys of the world to finance the business. I just put this weird bar of values and principles. I actually don't think it's weird. It feels really good. So you'd be surprised once you put this out. There are a lot of people like that. They're just very quiet, but
True.
they do show up. It's the issue though is that I think that we ended up developing this bias because the assholes are loud and they're loud and very rich. So it's I agree with you, and there is certainly tons of nobility, which I think it's also why it makes his ending so tragic, because it's almost as if I mean it is tough. Anyway, I read the whole thing. I was not, it's a different relationship to the one you have. And I was very sad for like a few hours just because it makes you wonder about the shortness of life. And,
Sure.
I thought about death a lot during the pandemic and about how I want to live my life now in this new chapter. And it goes so much about just spending more time with fewer people that just make you feel good, that when you
Yep.
interact with them, you're elevated, you learn something. And um, I think I spent like a really good, I mean, most of my professional career justifying myself and making compromises into the wrong things. But it was necessary because when you talk about that level of money, this is the very first chapter, for at least for me, and maybe that happened with you when you sold your company, where um, but even still, I know that there were a few things that you didn't agree necessarily with your previous employer. So uh, you always feel like you kind of have to like take it in. But then when you make enough money, and it's not that you and I were not rendering our private jets, surfing on fuck you money. It's not that, and I have no doubt that in less than a decade from now we will be there, because it's by the nature of our business. It's not even necessarily a materialistic goal, it's just a consequence of it. But when you learn that like we're not going to starve, we have all the resources we need, and we just got to play hard, and but with peace. So I don't know. I've gone through this whole process, you know.
Yeah, no, I hear you. You're right. I'm not super jet rich, but I feel like I've done fairly well in my career, and it actually changes how you make decisions. Like, I am not beholden to anybody. I don't need to put up with anybody's bullshit on things. And so I think that's an amazing feeling that I hope that everybody in the world can achieve. Um, and so I think that with that, I mean, one of the things that I really wanted to do was to be able to make my own sort of dent in the world to make it a better place. And we can certainly talk about that, but
Yeah, let's do it.
it does give you freedom of how you think about things and what you can do.
Well, I mean, I love the name of your firm, right? So I would say that that's the ultimate goal of the hustle, is to just have the freedom, right? You just live life on your own terms and conditions while doing good for the world. That requires capital. It requires leverage in one way or the other.
For
Um,
sure.
you
For
know,
sure.
um, it's funny today. You worked at Google, so I just wanted to ask you this because I was actually advising someone that was just thinking about joining big tech, and for me that seems like it seems like such a stupid move, because these guys, the products are great, the companies are awesome. You want to invest in the companies, that I've invested, it's awesome. You want, just like, I have no problem with big tech at large, because we're byproducts of it, but just cannot imagine myself working at these organizations. But a lot of people, they aspire to that. So and specifically the program that you went through at Google, so how was that? um and Yeah.
Yeah, I think it's definitely a personality thing. I think for me, I was very impressed at Google by all of my colleagues. Everyone was super sharp. Obviously, the benefits and the perks are amazing. You get free food, you could pretty much live there. Everything is fantastic on that front. But I think for me, it was just really big. And really big also means there are politics, especially at headquarters where I was working. And so I think for me, it wasn't quite the right fit from that perspective. And that's what led me to start my company right after Google. But I can see why people might want to work there. Certainly, if you're looking for stability or you're looking to make money, yeah, they pay well. Or if you're looking to work on really interesting, cool technology, I think actually, even compared to startups, because they're so well funded, they do have some really interesting projects going on, especially, with Waymo and their contact lens project and this and that. Like, that's really fascinating. You can't really bootstrap that business.
That's right.
So
That's
so
right.
I think there are plenty of great reasons to work there. I think just for me, it was, you know, it still had the corporate politics, and I didn't love that. And I didn't thrive in that either. Let's be honest. Like, I'm not good at navigating that.
Yeah, neither am I, but mostly because I don't give a fuck in that sense. But it's more kind of like, I really don't. I mean, I bombed every interview I've interviewed with Apple, Microsoft, Google, and then when it came time for the googliness, whatever, I was like, oh, I think these products are bad. Why are we pushing them? I was just very upfront, right? Um, so that's not gonna fly. But you're right in terms of there are certain types of problems in big tech. I think this is the argument to join big tech, is that there are certain levels of complexity that you will never be able to resolve at any startup or even at a series B, D, pre-IPO type of company. So how AWS, came to light, right? Like that's would not be able to happen, at a company that was not at scale. Everything that Netflix has done on the open source world when it comes to DevOps. I have a good friend of mine, Rafael, that is a product manager on Instagram. And last time I caught up with him, he was telling me the complexity of some of the problems that he has to solve, and they're fascinating. So yeah, you're not going to be able to do that. So different games for different people. Let's just put it that way.
They pay
Um,
really well too. I mean, for people who are looking to make money, like if this is, early in your career and you want to go and make money, I would never fault anyone for going to work at like a Google or a Facebook or an Apple. I
That's
think
right.
that is a perfectly legit reason.
Yeah. I remember. I mean, I'm gonna add to this take on also our friend Zach Coelius, and we were talking about when was the beginning of the end of, I guess, this. Maybe we're just getting old of this, San Francisco that we thought was great. And uh, and then he pointed out something that happened 6 years ago is when people started throwing rocks at the Google bus. Uh,
Yeah, yeah,
which is
yeah.
like
I remember that.
this is the most dumb way of protesting, right? And so I would say that combined with the people that were receiving the rocks, because I think I've lost count of the amount of times I've met folks that were very early in their careers and early in their lives, but they thought that they were, the shit. And they were not solving that interesting problem. They were making a lot of money and living a very spoiled life, right? I mean, there was even a point, I think the most ridiculous aspect of it was just like, oh, all these Uber employees that don't know how to cook now need to like get food delivery for the pandemic. So they do your laundry, they do your food, they do everything, they take care of you, treat you like a
Yeah.
little baby, just so you can come with your brilliance to solve a very, very small problem that will never be front facing as you're living in this lobotomized colony, because that's how these like campuses feel like. So I think that the remote work is actually better because it dissolves the high concentration of most of these people that, for me at least intellectually, they're very uninteresting. I enjoy spending time with other investors and founders that are crazy, because they have to be crazy to build these businesses, right? It's not normal people don't build decacorns in 9-10 years. Let's just put it that way. They're necessary. They're just not my people.
Yeah, and I mean, I think this is a fair point. Like Pedro, I don't actually think everyone necessarily should be an entrepreneur. I'm in the business of trying to help enable more entrepreneurs, but it's not for everybody. There's certainly a lot of ups and downs. Not everyone wants to have that kind of life. You're constantly thinking about some problem or this employee you have or your co-founder or whatever. And at Google, I think now in looking back, my biggest problems were all so small. Like it kind of didn't matter because I was part of this machine, right? So, you know, it's just different.
It's different. It's different. And I think the world would be chaos if everyone was an entrepreneur. But I do think that there's this whole sovereign individual theory of basically all of us at least having some sort of like individual representation that has some sort of monetary value, which I believe it can be true while you keep your day job with the internet. But it's different than venture back startup founders, which, and as you think about like that whole program theory about solving a problem for yourself, right? Uh, well, the best founders I have the privilege to invest, they're all crazy. They're crazy in one. They're not normal. They're very exotic people, and I like that because I know I'm not sure, I don't think I'm a normal person as well. And then and I have backed, I would say also, and I don't know how you feel about this, but just like these other entrepreneurs that kind of look perfect, like perfect curriculum, but they just it's unauthentic, because it seems like, if it wasn't so interesting and so profitable to potentially have a high quality company, they'd be working at Goldman or BCG. I am guilty of putting money to work sometimes in things like that.
Oh, for sure. In fact, I talked with a good friend of mine about this. This was a few years ago. He's an engineer. He had worked at all these hotshot tech companies, and people were basically telling him in so many words that, your next step up the ladder is to start a business, because he had already worked at all these, hotshot tech companies. And I asked him, like, is this really what you want to sign up for? Like, think, just like dig deep. Like, do you want to sign up for A, B, C, and D problems? Do you want to constantly be, and the answer is, like, knowing him for, over a decade, I was pretty certain he did not want to. Like, that's just not his personality. And that's just probably not what he actually wanted to do. He was like, yeah, I just thought it was like something that would elevate my profession. And that's kind of what I feel like entrepreneurship has become, where people are entering entrepreneurship. Not everybody, but some people are, because they think it's like leveling themselves up. But I really don't see it that way at all.
I agree. My trick, in order to not be tricked into, I call it the HBS fallacy. I mean, let's just put it like a nickname. It's it should not be tricked by the Laura or something like that. It's just really understanding the amount of suffering that that person has gone through in their life and how they prevailed over that. Ability to learn how to learn, decisiveness, relentlessness. These are usually good. And why are they doing what they're doing? There needs to be some sort of interesting story behind the founding of the company, that it isn't a business plan competition at the business school or something like that. Like they just gotta want to do it. That said, there are incredible companies that came out of these programs, and I have a high degree of respect for them. But I think that the birth of a high quality organization, it happens naturally more than these folks feeling forced to start a company. Basically, what you said.
Yeah, I think sometimes that can be really hard to assess. I think certainly if somebody has faced adversity in their life and overcome it, it's easy to say, wow, this person is really resilient. But I do also think that there are a number of people who have not faced, sort of that life or death or poverty to riches or riches to poverty adversity before, where it's not so extreme. And so then you're trying to assess how dedicated are they to the business or the problem, or what really motivates them to do this. And that's much harder to assess. But there are plenty of HBS folks, as you've mentioned, who have gone on to start amazing companies. So
Yes,
it's not about that, and more about, okay, let's try to dig in deep here on why they're starting this business.
absolutely. I could not agree more. At the first fund I won VC, one of my former partners, Eduardo, sourced a company called CapChase that came from HBS, and it was a great business. Um, and So talk about when you decided to quit Google and start your company. What's the story behind it, and what was going through your mind? That was right when the Sequoia Rip Good Times thing came along, and it was just right back into the financial crisis, which really hit much harder, I would say, for tech as well, for everyone in the US. So, what were you thinking at that time?
Yeah, what was I thinking? Great timing. Well, actually, in retrospect, it was a good thing, because I couldn't raise any money, and I actually think that helped me out a lot by not being able to raise any money, because it really forced me to understand how to build a business. I had, frankly speaking, no idea how to build a business. I worked in marketing at Google. I had no idea how to market a product, because when you work at a place like Google, the press is always writing about you. People are always coming to your site. So like marketing is not challenging. Marketing a startup is very challenging. And so I really had to just learn fundamentals. And remember, this was pre-lean startup. Like Eric Ries had not written a single word in his blog, let alone his book. And so there was no sort of framework or strategy around how do you start a startup at that time. And so I really floundered a lot, but I just knew that I wanted to get out of the big machine. And that was largely the impetus. And I don't actually think that's a great reason for starting a business, but that's why I left. And that's why I did that. And I floundered for a good 2 years, just trying to figure out how to make money. I sold all kinds of stuff. I was an affiliate marketer. I have, sold everything from clothing to vitamins to just all kinds of random weird stuff.
It's pre-Amazon store 3PL stuff, huh?
Yeah, I think now, actually, there's no arbitrage opportunity, but back then everything was pretty wonky and there wasn't a whole lot of infrastructure. And it just taught me a lot about customer acquisition. So that's what I did. And eventually, many years later, actually, well, not that many, but we started working on what became an ad network in 2011 or so. So a good 2+ years, 2 years and 3 months or so.
Nice. What when you talk about the fundamentals, because I remember when Eric just had a blog, it was on Blogger,
Yeah.
and it was, I think, South by 2012 or something like that, and Dave had the Pirates metric stuff. It wasn't even a book, he was still under Steve's blank class, and thinking about maybe doing the whole startup thing. So what did you read? It was a lot of Peter Drucker, a lot of Seven Habits of, like, what were some of the fundamental books that you think are still good today?
None of them. None of them. The thing that I think changed my life, that's a little bit over the top, but actually had a huge impact in how to run a business, was that very first blog post that he wrote. And I don't remember the exact date, but it was sometime around then, 2010, 2011. And it predates the book. But the blog post essentially covered the synopsis of the book. So if you don't want to read the book, if you look for his blog post, it was all about, first, the number one issue for software startups is customer acquisition and finding product market fit. And he defines what that is. We all know what that is. It's basically, can you build something that people want? And so how can you shortcut and find a strategy to shortcut getting to that result before building out too much product and all this stuff? Because all of my problems for a good 2 years revolved around building too much stuff. And then your feedback loop is just so long. Like, you can't even get feedback on your product until a couple of months later, but you need feedback today. And so how can you have fake buttons or pre-sell or whatever it is today to get feedback today? And that has changed my entire outlook on building startups, and also affects the companies I pick as well. Because the more cycles you can get on iterations, the more likely you're going to succeed in building your business. So how can you get more iterations? Because everyone's got a certain runway. You have to get your learnings in today, not tomorrow or 2 months from now.
That's right. Well, I think that's the whole ethos behind why people love talking about failure in Silicon Valley, which is failing fucking sucks. No one likes to fail, but it's like learning very fast and iterating rapidly and not being emotionally damaged by the mistakes you make. Just adapting fast is really the key, right?
Yep.
Great. And then you sold the company. Was it a good exit? How was that about? And then what was the process between going there and because I sold my first company and I didn't make anything. For a while I actually had a framed it was a true real bill, which I think it's worth now, I guess, like 12 cents or something like that. And I had it framed for a long time in my desk just so I would remember that I actually learned tremendously and I didn't lose a penny. But I was actually hired. I made so many mistakes as a first time found 11 years ago. But how was it for you? And then what was the process of joining 500?
Yeah. So I guess just some quick context setting. So eventually built out essentially an email ad network. And I think my biggest learning about the business, just in general, that kind of business, in case anyone is thinking about it, because I actually hear people pitch this business a lot these days, is
there's that company Live Intent that does, I think,
yeah,
real-time ads on email, right?
Live Intent does that, and they're at a fairly high level, but not necessarily in the ways that you might think. So I think one of the challenges is that email supply is really hard. When you think about companies who have really high quality email newsletters, they ultimately want to own them and sell their own ads. And that's what you see with a lot of media businesses that have newsletters, right? Like Morning Brew, The Hustle, et cetera. They own that ad inventory. They don't sell it out to an ad network like Live Intent or anybody else. Live Intent works with remnant, so the quality is not that good. But they can do other things, like they can put tracking pixels in there to retarget you on the web and all this other stuff, so they can make money through other means besides email. Yeah. But high quality emails is really scarce. So you have no shortage of people who want to advertise in high quality email newsletters and stuff. You have a shortage of high quality emails. So that's my learning about that business. And I think it's just really hard to build at scale, that kind of network. So I think the long story short is we didn't hit the goals that we wanted to hit. I mean, we were making some money, but it was not going to be a big business. And meanwhile, we also had been working with a partner called BuySellAds. And essentially what we were trying to do with them is kind of backfill extra inventory they might have had, or vice versa, and that kind of thing. And so they were actually making good money with us. And then we had started talking about things that could lead to beyond a partnership, which ended up turning into the acquisition. So it's not like they came out of nowhere. They were already working with us. We were already sending them money and stuff like that. The exit was okay. Like, in all honesty, basically just return money to investors. But I think it was absolutely the right move, because I think just given the learnings from that, I don't see a path where we could have really blown that up. I think we would have had to have extended into other things, like maybe we're an ad network for, I don't know, the web or mobile or whatever, or maybe we're even offering things that are totally different, like analytics or other marketing tools for marketers, or even on the publisher side, or benefits or something for publishers trying to run a small business, whatever it is. But we couldn't have gotten to a high level on the ad network alone. And even Live Intent has, like I said, they use that inventory to extend into other inventory.
Yeah, no, I you touched on a point that it makes sense, because I think every time I see an email that's powered by them, what's being served there is completely out of context towards the email. And it feels
Right.
really, it feels awkward. It devalues my perception on the content I'm reading, the brand that I'm seeing, and ultimately their tech. But not anyway. So, and then you joined 500. Were you already interested in being an investor, or was one of those serendipitous like things that kind of happen sometimes in the Bay Area? What was the process back then? Because I must say that I very much appreciate how you ran the batches. When we met when I was a SendGrid, which was also a 500 company, and doing a lot of mentorship to founders and so forth. And I enjoy how you ran it. I enjoy how Marvin ran it. It was very different styles. I like both, because I think I am in that spectrum, depending on the type of problem that needs to be solved.
Thank you. Yeah, so I actually had not thought about going into VC or investing at all. It's not a world that I come from or knew anything about. I think many of my classmates or friends had wanted to be VCs for a long time, but it was, I think I'm a builder at heart. And so the reason how I ended up there actually was, after LaunchBit, I was thinking about, well, what do I want to do next? Like, what is the next problem I want to solve that I care about? I think one of my other learnings was, frankly speaking, my life's work is not ads. Like, that's just not my mission in life. And I don't know if many people would say that it is. Just ads are not really a fun business to run. And I couldn't see myself doing that for 30 years. I wanted to find a problem that I cared enough about to want to do like for the rest of my life. And so I think by being there, by being at 500 startups, I wanted to understand what problems were interesting to people at that time. Like drones were coming on, VR, AR, Bitcoin and blockchain and whatever was all of that was coming up around 2014, 2015, right? And I didn't know about any of that because I'd been so heads down with my company. So I really actually wanted to start by mentoring startups to learn like what were other people working on, like what was happening in the world. And then one thing led to the next, and I ended up running the accelerator program, which was super fun. I had gone through that program myself with our company. So I kind of had been a customer already, and I kind of knew what was the program that I would have liked. And that was what I tried to do at 500 startups.
Nice. That's great. What's your view on the programs today? I think it's interesting because I mean, I funded many YC companies and 500 companies, and I'm a part of the first IPO at Techstars, right? And so I think that certainly these products, they're producing phenomenal returns if they're well run for investors. They do help founders, but For me, at least, I've been thinking about this a lot. They seem like they are products from another era, that the market has adapted to a degree where, if there's one thing that I intellectually fundamentally disagree with Y Combinator, for instance, is that you can scale this forever. I don't think it's the case. I think that every vintage you're gonna have every year we'll have 200 companies that are really worth funding in terms of return profile globally. Maybe 100 in the US and 100 in the rest of the world, and uh, just scaling that up. Maybe I'm wrong, but I don't know when the they do a great job. If you're with the right program managers and the right partners, and I've seen the work that has been done, it changes the lives of these entrepreneurs. So, but it seems so dilutive, uh, but it could also be that I'm jealous that I would love to just have that level of brand recognition and get so much ownership for so little capital. But
Yeah, I think you're just jealous, Pedro.
I'm just
I,
jealous.
I'm
That's it.
jealous as well. I mean, I think so. There's the model, and then there's who's winning in the model. So I think it's obvious to say that YC is winning in the model these days. I think a few years ago it was not so clear cut, but I think YC has really just kind of accelerated and taken off. And what is it that they're really selling? They're selling brand and essentially fundraising is what they're selling. So people take the dilution mostly because they hope they can get a huge lift up. And so when you think about it, like they don't need everybody to be a unicorn because their economics are so good. Like when you are taking 7% of a company, frankly speaking, actually the return profile doesn't have to be that good, but they've been very fortunate where they've had decacorns, unicorns. And so for them, they can look at a batch and say, hey, if we can get at least one or two in every batch, it is worth doing. And we should just keep doing that. And I think that's absolutely the right strategy for them. It doesn't mean that it's great for everyone else. I think the other interesting thing is 50% of YC's companies now are international. And my hunch for why that is in the US, there's certainly more investor competition. So there are a lot of startups that are not going to YC as well because they can take money just directly from investors and get a great valuation. So there'll be a number of companies that will avoid YC. But I think they can continue this game for a while because, at least internationally, there are not that many investors in many parts of the world. And so you can certainly elevate yourself by going to YC. And
Yeah,
that, I think, is what's happening.
that's right. I mean, your analysis is perfect, all the way from my jealousy to the that's true. I mean, look, like, because and it's to the credit of like the incredible essays the program has written for like the last decade or so. There's that book from Robert Greene called Mastery, and he has a chapter on program and like his story and how he was as an artist and a painter, and he's a fascinating person in many ways. I have at least a lot of admiration because he's authentic, right? There's a very clear ethos behind him. But what you're talking about in terms of the internationalization, you and I, we both run organizations that invest in multiple parts of the world. So a good portion in the US and then the rest in Latam. And I at least for me, Latam. So I do believe that there are unexperienced Latam founders that see a check from Y Combinator as a Dolce Gabbana like value validation on like a
Yeah.
cap table. There is that thing about like I'm better than others because I passed
Yeah.
the interview. To the degree that how many founders that we know flex the fact that they have an interview ready, and you
Right.
just want to meet with them before the interview because you know that if it's after, prices are going to go higher. I mean, kudos to them. They built like a great business. It's impressive. The Anyway, the this is funny. So you left in 2017, right? And you decided to just start like a VC firm while you had a kid as well. Uh,
So there's a
just
lot. There's
just
a
to
lot.
make it easy.
Yeah, there's a lot to unpack there. So I think along the way, like I said, I was kind of searching for a problem that I was really excited about. And one of the things that I realized was that actually I was I noticed that actually in running these batches, batch after batch after batch, a lot of people struggled with fundraising. It wasn't just me with my startup LaunchBit. I think, when you only have a data point of one, it's hard to say, oh, fundraising is broken. It could just be me. But then when I saw all these other companies really struggle, and especially who struggled, that was very intriguing to me, where I noticed that essentially there were some companies in my batches that didn't struggle at all. Like they kind of checked all the boxes, right? They had that resume that everyone loved, or that network that everyone loved, or whatever, and tended to fall along the lines of particular demographics like Silicon Valley, male, maybe white or Asian, worked at Facebook, went to MIT. You'll get funded all day. But then I had other founders who didn't quite check the boxes, like they were from some geography where nobody's ever heard of it, or whatever it was. And so I noticed this batch after batch after batch, and I was like, this is really interesting, because like for me, I had a very good sense after every batch, like who were the winners from working with these people, not based on talking with them or their demographics or their resume or whatever, just from working with them. They come into my office day in and day out. And I thought, well, that's very interesting. Maybe there's a VC model here. Like this is actually a problem that I'm really passionate about, because I faced it myself, and seems like it's very much worth solving. So that's actually how I ended up deciding to start Hustle Fund with my business partner Eric Bond, and then later joined by She and Co. And so that was something that we had started planning on doing. I think
By the way, is the nicest guy. Eric is the nicest guy. Like one of the nicest people I've ever met. He's just a nice guy. If he could go back in time, I'd like him to date my future daughter that I don't have. That's how nice I think he is. Just so we put it on the record, but you keep going.
This podcast will be ingrained in history. But anyway, so we had started thinking about leaving 500 startups to start a new kind of VC fund, but a lot of things happened at the firm, and while I can't talk too much about it, I ended up leaving very abruptly in the middle of my maternity leave, and then felt like, okay, well, I guess now that I have left, maybe we should start that fund now. So that's how I ended up starting this fund 8 weeks after giving birth to my second child. That was not something I had intended to do, but it's kind of just what happened.
Yeah, it's funny. Sometimes I think that life has a way to course correct pretty fast if you're off track for whatever reason. And then you just have these exogenous circumstances that will just put you back on track. I think that maybe the pandemic is one that is happening to everyone at the same time. Sure. While we're all connected, but that's also another good example. Because probably like if you had you planned, right, you would have said, oh, yeah, I'm going to wait a few years until X, Y, and Z happens, and I kind of like, and then anyway, the fundraising. Yeah. Oh, sorry, go ahead.
I mean, I think one last thought on that, like for most of the time at 500 startups, I was very happy there. Things ended very abruptly, but I think for many of those years, I was very happy there and really liked the ethos. They actually have very similar ethos to what we believe at Hustle Fund. And so I could have seen myself just staying there for years, and and may not have ever started Hustle Fund if the world had, gone a different direction.
Yeah. Oh, but I think, I think it was a respectful reason, and I don't want to get into all of that because I have no idea exactly what you. But I understand how the terms and conditions of these things typically work. But anyway, so going back to Hustle Fund, so I do think that every founder, I mean, the arbitrage that I enjoy finding at the pre-seed and seed level are founders that are maybe at 70% of like being a fundraising beast and just really working hard with them to get them up to that 30%. I think my investing heuristics really changed. And this is where this whole inevitable thing came about. I was actually talking to another 500 startups, the team member, Arjun.
Mhm.
And he was an advisor at the first one VC fund, and someone I really like. And we were talking about, it's like, wow, we sound very cliche, which is true. We're having burgers at the Battery, and then I yeah. Oh, that, just a complete side note, that hilarious Instagram account, that Liquidity.
No, I don't actually follow any Instagram accounts.
Oh, I see. Oh, that is such a good like meme account. It's very funny. And they
Okay.
had the whole Miami meme VC starter pack, and he had like 10 things, and then in like 2 weeks I've done 6 of them. just, we can, just as a side note, but anyway, Arjun talked about this whole, we were discussing, and I was like, look, my best investments are the ones I spend the least amount of time with. I mean, maybe I will do an intro, this and that, but like I'm this nitrogen, this accelerator for like a very fast thing. But if I die tomorrow, all these people, they're gonna be successful. There isn't this grandiose
Yeah.
view that investors, are incredible builders or so forth. Like you just don't want to be just money. You do help, but in the end, you want to invest in people that are, that's the whole thing, partnering with inevitable people. They are inevitable. They're going to get there. And it's never about you. And you are this like insignificant portion that is privileged to even be a part of that story. And these are the types of cap tables that you want to insert yourself in. The ones
Yes.
that are just paralyzed by needing your help are probably the worst type of investments, right?
Yeah. No, I agree. I mean, I've known Arjun for a very long time, even prior to 500 startups, and he actually even nudged him to move to 500 startups back in the
Oh,
day. Yeah.
nice.
So, he had an advertising technology business as well. So that's where we come
Yeah,
from.
yeah. Well, he competed. He was. I didn't know that, but he was a competitor to Brad Flora. That is
Yeah.
also another friend of YC.
Yeah. Yeah.
Yeah,
Another
yeah.
friend.
Small world.
And I know Brad from ad days as well. So anyway, it's funny how everyone ends up in investing. But yeah, I mean, I think what Arjun saw, it was something that I think all of us at 500 saw, which is exactly what you're talking about. It's funny when investors say, oh, I don't think I should invest because I can't help. Well, actually, that's kind of the wrong way to think about things. You should invest in a company if you think they're a good investment, not whether you can help or not. Now, I think to your point, Pedro, like because money is a commodity, then you do have to figure out a way where you can actually be useful beyond the money. Even if they're amazing entrepreneurs, you want them to feel like actually you are, not just any replaceable person. So that's the weird game about it. But 100%, just from my experience in being at the accelerator, you really don't want to be picking people who need help, because the best entrepreneurs, they could use some guidance and shortcut and maybe some intros, but they will find their way with or without you. You are not running the business as an investor. And I think that's one learning that I certainly had that is hard for many entrepreneurs who are making the leap to the investor side to grasp. If you have to be there running the business, you should be starting a business.
That's right. Well, the way I summarize that is basically that we as investors, we have influence but not power.
Yep.
And you have to be very comfortable with that. And it's a tough thing. And this is why sometimes there are so many bozos in the asset class, because you're always dealing with money and power. So you think you have some power, and no, you're not. You're just basically, at least that's the vision I have, right? Like you just got to surrender to the whole thing and make sure that you're more a defense player in a way. I don't even know the rules of American football to this date, but I've read all Bill Walsh's books. I love The Score Takes Care of Itself and so forth. But I figured that you're defending, right? Make sure that founder doesn't get tackled so he can touch down. I guess that is as far as I go in terms of
Yeah,
football
I
metaphors.
guess my analogy, and we use the rocket ship analogy, is you have a seat on it, but you can't do anything. You are not driving it at all. And so, and that I think was just actually a learning for me. When I was picking my first investments, I think my problem was I was thinking too much about I were driving this ship, what I would do this, and that, and that, and that, and that. And oh yeah, I think this could be a great business, but you're not driving it. And so you have to take these people for, who they are, and maybe they can learn and change, but do you think they would be good at driving it?
That's right. That's right. Interesting. And then as you start developing your own brand as an investor, what were some of the characteristics that you think are important and that resonated with you? Meaning, oh, if I dedicate myself into this, I can be I can be world class, and I'm naturally a little bit better than others as an investor. I think that's where the value add comes. At least I know where I can make a difference and where I can't.
Yeah, I think the two areas have been fairly specific. So one is around fundraising. I don't think I'm unique in being able to help companies at that. Like, so many investors, everyone else knows so many investors, et cetera. But where I do think it is unique is for, we invest in a lot of founders who are not well connected. So that is unique in that sense. So that's one area I think where we've been really able to help a good number of companies in our portfolio get connected to investors. And then I think the other area, which I do think is a bit unique relative to other VCs, is because I've done a lot of customer acquisition in my life, and also have seen a lot of my startups customer acquisition and how exactly they're doing things. Like, we provide a lot of guidance. And again, we're not driving the ship. We're not actually doing the customer acquisition for the founders, but at least can guide people towards, these channels tend to work, or, we think the CAC could be lower here. And if you try these things, et cetera, like that actually has helped move the needle. Not always, but with some companies.
That's great, which is so important, and very few investors know how to do that. That does require a different background. So if you're a founder and you're listening to this, take Elizabeth's money. She's a good person, and I genuinely believe in that. And then I would say that to your point on fundraising, there's just one thing that I think that is at least I would consider that also one of my strong suits. And it's not even just about getting to know them. I try to get it down to like a really, really methodical process, to the degree that for the founders that are transitioning from C to Series A, that big first round that you raise, I'll say something now that maybe you won't, but it's okay. I'm comfortable saying this, but sometimes I'm the one responding to all the investors as the founder.
Yeah.
Right.
Yeah.
Like, you're not gonna, if you're comfortable and you want to play the game, and I tell them, I was like, this is just a part of you that if you are very successful, you're going to be raising a lot of money every 12 to 18 months. So let me teach you how the world of money works and how to raise it. It's going to be 6 months or so, but trust me. And if you're comfortable with that, and that's one of the most satisfying, feelings when you see them graduating and calling you for more stuff. I just had one now as investment. It was a $6 million valuation, just raised a Series B at a 300 million. And we managed to grow the valuation from 220 to 300 in a matter of like a week and a half. And it was because we got 4 competing term sheets, but the storytelling, that's where I do think that, so for the ones that whenever you're thinking about taking money from someone that says, oh yeah, I can help you fundraise, it's not just about making email intros anymore, or like connecting to your buddies, you got to get dirty.
It's about the armchair quarterbacking. And so I haven't taken over people's emails, but a lot of back and forth of, oh, this person said this, now what do I say? Or, this person offered these terms, now what do you say to these other people, or whatever? Or, so yeah, I think that's sort of the nuance that's hard to explain. Like, when you first talk to founders, like, there's a lot of nuances around this fundraising game. And I think for those of us like you, Pedro, who have armchair quarterbacked a lot of raises, it's a game that's, I think, hard to learn the first time, but once you figure it out, then you can really optimize a lot of things.
Yeah, absolutely. And it's also funny. That's like when you've done it like so many times, and I always every time I do it, I love learning new little things about it, because every time you do it, the market is at a different stage. So
Right.
you learn about all these different things. So it's like, what have we been seeing in the last 6 months or so, or actually 2.5 years, 3 years? So many hedge funds realize that they need to invest pre-IPO to continue to have great returns. So they're crushing the lazy VCs because they are faster, smarter, and have more money,
Yes.
both to make and to lose.
Yes.
You know,
Yes.
so kudos to them. Now I think that the next wave that we're seeing is a bunch of private equity people that have no fucking clue about how venture capital works, getting into the arena and sending these horrible term sheets. But I think it's great because we increase valuations for the companies in that sense. But every quarter there's just like a new trend. So I don't know. I really enjoy the process of fundraising.
Now is a fun market to be in as we speak. I don't know when this podcast is coming out, but it's a fun market right now. We'll see how long this party lasts.
Yes. Well, it's May 19th, 2021. It should be out probably in like 5 to 6 weeks. And so
Well, hopefully the market will still be fun then.
yes. Well, there's one more, the bigger topic that I wanted to cover before we begin wrapping up, and it's one that for me is such a privilege to just chat with you about that, which is the building of your business, right? Which is also the building of Hustle Fund. And because you're so clever about marketing and acquiring customers, all the different strategies that we come to realize that when it comes to actually raising money. So I think for those that don't know, when it comes to actually start a VC firm, we have two sources of revenue as investors, right? Management fees and carried interest. And ultimately, management fees are just a loan on capital, because if you're really good, you're going to recycle the fees, pay that back, or continue to use that to invest. But there's this moment where you're like, oh, I want to raise a fund, but you have no money. And there are so many different ways to solve for that problem. So I'd love for you to just expand on that, and what have you thought about that? It works, what doesn't work. And I think that when we both started 2017, it's funny because you had a $11.5 million for fund one. Is that right?
That's right.
Yeah, so we did an 11 and a half, or it was, I don't know now if it's 11 and a half or 10.4, but like basically that was the first close of a $30 million fund. It was the hardest thing I've ever done in my life, was to raise those 10 or so million. The metaphor I put it out there is basically it was like chewing glass for breakfast, and as the glass perforate your gums and you swallow your own blood, you smile. That's how it felt.
Wow, Pedro. Okay, that's intense.
So how was it for you?
Yeah. Well, I think I often say that raising money for a fund is harder than raising money for a startup. And, I think a lot of people are like, well, you're a VC and that's very privileged to say things like that. But I honestly think it's the truth. I think that raising money for a fund, because your product is money, you have to raise it. I think if you're a startup, your backup plan is maybe you bootstrap for a bit and maybe you do it as a side thing while you work and make money or whatever it is. You can't really do any of that as a fund. Like, it's hard to bootstrap a fund unless you have a lot of money to begin with, in which case, well, maybe you don't care if you raise it, but it's your product is money, and it's very chicken and egg, because also you cannot show results without having money to begin with. So there are just a lot of components. I think the last component that nobody talks about are all the nuances that go into it. It's not like you can just broadcast on Twitter, hey, I'm raising a fund, and have 5,000 people give you small checks. You only have, and at that time, you only had 99 investor slots. Now the SEC has increased that for funds under $10 million, but still for an $11.5 million fund, which is over $10 million, you would only have 99 slots. So it means that every slot counts. And so you have all these like crazy nuances that nobody knows about. And so now you're limiting your pool of people who could invest and the check sizes. And so it's this crazy game. And we did over 700 meetings to raise our fund one. So yeah, it was hard.
Oh wow, that's a lot. I did about it was a 341. Not that I counted.
Yeah.
To close 92 LPs.
Yep.
And 92 items, like line items, right on the actual limited partnership entity. So that means actually maybe 300 humans. But yeah, and then today, this is what we talked about last time that we were catching up. I fundamentally believe there are many representations of this trend, which is also one of the reasons why I wanted to do this podcast. You have this combination of all these influencers are want to become investors, and you got all these investors now wanting to become influencers, because that's a good form of leverage. And then there's the combination of that world with media, right?
Yes.
And so what are your thoughts on that trend attached to investor education, attached to rolling funds with angel list? And I ask you this because right now with Atman, we're going to raise a fund. I have no idea yet what will be the format of that. We can talk offline as well about, like, I'm deep into investigating what's going to be the most productive way, because I am, it's possible to just do it the traditional way, but it doesn't seem necessary. And it seems like you're also leaving something off the table. Uh, you know.
Yeah. I mean, money's a commodity. And so my money is as good as anybody else's money. And so again, it kind of comes back to, well, why should a founder who doesn't need any help work with you? And there are many reasons. It could be the speed of your check. It could also be distribution, which is why you now see a number of these influencers. And I use the word influencer lightly, but people with an audience raising funds, and vice versa. I think we talk about why is it that YC is winning all these deals. Maybe part of it is Paul Graham, but I think part of it is the larger YC media machine. And Andreessen Horowitz does this as well. This is why they also have investments in Substack and Clubhouse or whatever. If you own media, you have a lot of distribution channels. That's very valuable to founders. I'm not that big of an influencer, but whenever I tweet, like retweet one of my founders stuff, like they inevitably get more customers or whatever it is, the call to action is in there. And so that is something I want to, build up more and more as the years go by, right? Like the more I can do for my founders to help them get customers or partnerships or whatever it is, the more valuable my money is. And so that, I think, is the crux of it all, and why you see this happening going both ways. You need to build up an audience, and I don't mean you, but every investor needs to, in order
Yeah.
to.
No, this is a game of sales. I remember when Bill Gurley was explaining why private equity investors don't do this, and it's because they typically come in when things aren't that great.
Yep.
And for us, is the opposite. We need to sell this like long-term optimism, and people need to understand that your money comes with some sort of it's basically tactical value add and some sort of emotional values principles that you align.
Yes.
And if you can combine those with media, I
Yes.
think that's where you want to be today.
Yes. I 100% agree. So that's why you see everyone doing what it is they're doing. Now, I think to the second part of your question, in the long run, like where is all of this going? I think number one, so there's the legal aspect. You talk about rolling funds and SPVs and whatever else. I think just right now, like the traditional VC structure is just so hard, for lack of a better phrase. Like if you have a rolling fund that you can just announce on Twitter, and the clever thing about the rolling funds are all the legal aspects that nobody sees, which is they separate you out into two parallel funds so you can get more investor slots, right? You can have your qualified purchasers in one and your credit in the other. So you can actually raise money from more investors. They separate it out through some clever legal hacking, like such that you can reduce the minimum. That helps you raise money. I think the more and more it can look like retail, the easier it is to raise money. In contrast, like with our traditional fund, the reason I had to go and meet with 700 people is I had to figure out who was actually interested and who wasn't. Like with a rolling fund, you can broadcast that and get warm leads all day. With a traditional fund, it's like I'm now emailing people who are probably not going to be remotely interested, and I'm going to waste my time, like 30 minutes to an hour, only to figure out they're not actually interested. So I think hacking some of the legal structures is going to be an interesting thing to watch, and something we're certainly discussing a lot at Hustle Fund. I mean, I think the challenge that we're in is, we're an emerging manager, but kind of pulling out of that, right? And so we actually have a great shot at some of these institutions, and they are not going to want to get behind a rolling fund because it's a very new concept. And so what do you do? And that's something I think is certainly going to be an interesting thing to figure out.
It's funny because this is precisely the question I have. Back in the day when AngelList was just starting their fund hosting practice, and we were looking to raise a $10 million fund, we were going to use them. And I was way less experienced as a founding general partner, which is different than being an associate at Funders Club. And we burned through like $25,000 of legal fees. But frankly, it was just that the fund formation lawyers hated the AngelList people, and the AngelList people were like product sells everything. And then and I was like, oh great, and I'm paying this fucking fight. So you know what I'm talking about, because what they're doing, AngelList is amazing, and they're incredible at like putting really, really disruptive products up and running. So
yeah.
And then you raise money from like a large institutional investor, and you realize that they will not do any of these things, and they need all their side letters, and they want to have a seat on the LPAC, and they want these like 50,000 other things that they've been getting for God knows when, because that money was made, I don't know, in the 20s or something like that. It's tough. For me, at least, I'm more comfortable potentially starting out. This is just me live jamming with you on the record, to just go straight up rolling for two reasons. First, because I'm basically starting a new firm, so I think I'll be okay, because there is enough money in the world, and you don't need necessarily to just be the CalPairs and the Stanfords and the Yales. I also think that if you want them at a certain point, when you have the returns, there are ways out of it as well, potentially. Yep. So maybe there is a limit of AUM escalation that these products kind of work. We don't know when, and maybe they'll ship new features and products, and you never leave them. And the second part, it goes to show on the retail investor. I was in Brazil for Christmas, New Year's of last year. I've lived like a 2-month period within the pandemic. In my mind, there was no virus. So I went to like a lot of different places, and I met so many interesting people that made a lot of money. They just don't know anything about tech, but they use tech every day. And these are good, honest people. They're not just, fourth generation billionaire this or whatever, which, don't get me wrong, I raise money from these people as well. And some of them are amazing. Some of them are not that great, which we talked about in the beginning of our program. So there was a part of me, I guess that's the 0.1% of the AOC that I have inside of me, that was just like, this is the best form of socialism that could ever happen. Because why is it that these people can't have exposure to the best asset class that there is, which is venture and the smartest people building tech? So I like that idea, because it democratizes the asset class in a phenomenal way.
Actually, it's funny that you tie that with socialism, because I would actually say it is more tied with capitalism. Because when you think about true capitalism, like true market conditions of anybody can offer their money and you can take any offer or whatever, that is not what we have right now. When you have a limit to the 99 investors, you do not have true market conditions. And so if anything, I would say that a lot of the SEC rules, and this is a much longer rant, I think a lot of the SEC market rules actually is the opposite of capitalism. So that's a much longer conversation, but I think that there's in the future, there's got to be kind of two things. So one is certainly pushing on government regulations. That's not something I am good at, as we kind of talked about in this. I am not very tactful or nice, and not very great about working with government, but I'm sure somebody will help work on that, and actually may even be AngelList, because they have a lot to gain by pushing that. And then the other is, you also now have these emerging products that will help with that in hacky ways. If I were starting a fund right now, I would probably go with some form or fashion of a rolling fund, because I think that's the best way to get started. Unfortunately, that was not available to us in 2017.
Good. You will make me think, as I am thinking already. And to your point on the regulation, are you guys a part of the NVCA?
I don't think so.
I see. Not to try. I will tell you that as an emerging manager, I really enjoy the work that the National Venture Capital Association is doing. And they have this trip that is called a VCs to DC. And I go every year. Elizabeth, is
Oh,
awesome. You meet up with senators, members of Congress. I had meetings at the SEC. And then you really learn how it works and how difficult it is. Like DC is just, it's a very complicated place. Um,
yeah.
So but someone has to do it. For me, it was like going into like a school field trip, because not all of us were ignorant. So there was at least like this equal playing field at the table, where I could be the emerging manager that in 2 years from now I'm going to start having my first IPOs. But still, these people introduced themselves as like, yeah, we have $15 billion of management under management, and 22 IPOs across the last blah blah blah. And I was like, yeah, have you heard of Rappi? That was like my opening, but which is a great company that I'm grateful to be an investor. But anyway, to just wrap up, there's just a few questions that I always enjoy asking, just to learn more about friends. What is your morning routine that's ideal to you? Like all the things that you kind of do that you're like, all right, this is gonna be a glorious day.
You know what? It would just be sleeping in. That's it. That's it, Pedro.
Great. Okay. And what is your biggest fear, if you're comfortable sharing?
Oh, yeah. There are a lot of fears. I mean, I think climate change is certainly one, but within, let's say, my line of work, and going back to why we're doing Hustle Fund, our goal for Hustle Fund actually is, it may sound trite, to democratize wealth through startups. And that can be in a number of ways, helping companies get more resources and knowledge to be able to raise money, but it can be on the other side as well, like helping enable more people to invest in startups. And so we're attacking this in a few different ways. And I think one of my fears, and why we're doing this, is you see a lot of bifurcation of wealth these days, not just startup related, but just in general. Certainly in the US, you have a lot of people making a ton of money, especially in tech and investing. You also have a lot of people who are not doing well. And I think that our system is, I think there are a lot of drivers for this. Automation is certainly one of them. Globalization is another one of them. But we need to, I think my fear is that we have this huge divide that has a lot of ramifications, and we need to somehow address it.
I agree with you. And having been someone that uh, grew up with, I didn't grow up poor at all. I'm very grateful for what my mother and father provided me, but I certainly was not wealthy. And had, and not, and when you, and I love America. This is such a great country. I mean, there's no other place on earth that I could have come here with no connections and, do what I do today. It's beautiful. But I really had wanted. That's the other thing where I think that we do have systemic problems. But this is why I'm so grateful for my mom, because I was educated in a way in terms of perseverance and hard work. I remember when I was a kid, I used to cry and complain about stuff, and then my mom would get upset at me and say, "You got to stop crying and figure out a way to sell tissues to the other kids that are crying."
Oh, there you go. Yeah.
Now you
The
understand,
lemon stand.
right?
Yeah.
So I if you look at America today, most of the country, unfortunately, by a multitude of reasons, they're just uneducated and fat, um, and lazy because they're always behind a screen doing something useless. So it's tough. And I mean, I buy 100% the whole thing about democratizing wealth through investing in startups, and that's something that I hope we can help each other in terms of just building that, because it's important. It's, again, it's the only type of socialism I can get behind, right? Which, like you said, is the most capitalist one. So that
Yeah. It's a
that
real head warp. Is it socialism or is it capitalism? I don't know. But yeah, I mean, I think sort of the other thing is, almost maybe because of tech, or at least some of it is tech, with the globalization, the automation of things, like that actually is driving the bifurcation. So we need to bring more people into tech somehow. And that, I think, is a challenge.
definitely, and also we have the diversity issue that is it's a big one, which is something else that I really appreciate about you, and I think we correlate into that, where we just like, look, let's be conscious about it and go over the issues and talk about them, but not necessarily make them some sort of flag that we raise. I think that there is also this exaggeration, of, at least for me as a Brazilian, and Pedro could be the guy that cleans your pool, makes you tacos, but could also be your VC. And, uh, but like, I don't care about any of these, like, because like if you put race before competence, it's complicated as well. And there you have people doing that. And at the same time, we have to discuss the issues, because I have faced these problems. Uh, I hope to be successful soon enough so I can start naming names without disparaging or sounding like a crazy person. But I mean, I've been in many meetings where I was like, I am getting treated differently, although I have better numbers because of my accent or where I'm from. But I refuse to make that a thing, because then you're putting out something that is not harmonious.
Yeah. I understand. It's complicated. Like on one hand, actually, I'll just tell a quick story. When I was a founder and I was raising money, I went into this one meeting, and at the end I asked the investor, "Oh, so what do you think?" And the investor said, "I don't want to say the wrong thing and call you a meek Asian woman, but I questioned how you'll lead a company of 100 people." That's what he said.
Wow.
And it took me actually, I felt like that I was in a movie where time just paused, because I was thinking, did I just hear that correctly? Like, who says that? Like, that was what went through my head. And then I was thinking, oh crap, I need to come up with a good response right now. Otherwise I will seem like a meek Asian woman. But I mean, I think the line that we walk on is really challenging, where, okay, yes, I do wonder actually how many people, after he said that, I did wonder how many other VCs are unconsciously passing because they think I'm not a good leader. But on the other hand, I imagine that almost everyone who is passing is, also passing because they have, great reasons to pass. And frankly speaking, I would have passed on my business as well. So it's it's a fine line to walk on, because I do think there are these unconscious biases that need to be addressed, such as what you described, of like when you hear somebody with an accent, or you see a woman pitching, or whatever it is. But on the other hand, like, the crux of it, at least in my case with my business, is like, yeah, I think there are a lot of people that just would hate the business. I don't think like I said, I wouldn't have invested in my own business as a VC. So that's kind of the tricky part, and sometimes it's hard to parse it out. And that, I think, is the challenge that we face with regard to that, and diversity.
Yeah. It's funny also this, I think sometimes people just still raise a lot of money out of guilt with this new environment. I see that as well. I know sometimes I would say people being extra nice because, I mean, this is a whole nother story. I don't know how you're on time, but I remember the first day in America as an immigrant, I figure out I'm brown, not white in the US. That was a fascinating realization to me, because in Brazil I am white, and so but here I'm brown. And the day I figured that out was it was a grad school and a friend from Nebraska. And then I was like, wait a minute, I'm brown. And then he got super, right, like PC. He's like, oh my God, no, I didn't mean it. I was like, no. I mean, no, I want to understand, like, what do you mean I'm brown? And then, yeah, you're brown, you're Pedro, you're from South America. You grew up in the jungle with the monkeys. I'm not, no. He didn't say that. I'm just that part. That's just a joke. But he did say the other parts. And then he said something else that I thought was so interesting, which was like, oh, I was like, but are you sure I'm brown? Because I asked him, I was like, I always felt it was shocking to me, right? I was 22. So it was 10 years ago. And then he said, do I know you or do I not know you? I was like, what do you mean? He's like, oh, no, if I know you, I think you're white because you kind of act sometimes like a white person. But if I just see you, you're brown. I was
What
like,
does that even mean?
I was like, what? No, but I think, I mean, look, like I don't judge in that sense. I think it's just fascinating to understand how people think. So in the end, it is a game. If we want to wrap it with something like that, it's basically kind of like, it's a game of fighting cognitive biases. That's for sure at all levels.
Yeah, I mean, there are definitely a variety of biases in this industry that needs to be worked on. But I think it also does tie into kind of my bifurcation theory, which is, for so long, if we're just going to put it bluntly, tech has largely been, male and white and Asian. And so, you end up getting these flywheel effects of people bringing in other people who are their friends, who may look like them, people funding their friends who may also look like them. And then I think that ends up leading to some of these issues as well. And so now we're kind of we're trying to harness the power of tech and startups, which to some extent may have caused some of these bifurcations in the first place, but also use that to kind of also bring more people into tech. So it's complicated.
It's hard. And I do think that, intellectually we have this, it's a rubber band that if you pull it too much, it breaks apart. Meaning, I think that there's a spectrum of people that I am very comfortable funding that are different than me. But I do have a limit, if I'm being honest with myself. And you tend to, if you're not really conscious about what you're doing, you tend up to just, backing people that are very similar to you. That's dangerous and it's intellectually insincere. But on the other hand, there are certain values and principles that I have zero flexibility on. That they're must-haves in order to make an investment. But this was such a great conversation.
Yeah. Well, cool. Well, thank you for chatting with me. It was actually a great long conversation. I don't think we've chatted this long in a long time.
Exactly. I love it. So, it was very insightful. And especially because you're so thoughtful and unafraid of being yourself. That's, I really appreciate that about you. And, for those that are watching us on YouTube, we're also available on all major podcasting platforms such as Spotify, Apple Podcasts, Google Podcasts, and so forth. You can hear the highlights of every episode on a separate channel that we have for the short clips about all the questions that we talked about. And leave us a comment, subscribe, like us, tell us what you've learned the most on this episode. And then Elizabeth, if people want to get in touch with you, what's the best way?
Yeah, you can find me on Twitter. I'm DunkHippo33. And so I do try to respond to all tweets. And also, if people want to subscribe to my blog, it's just at elizabethyin.com. It's got a lot of tactical information, especially on fundraising.
It's great. And the content is phenomenal. Highly recommend you do both. Thank you, Elizabeth. See you next time.
Thanks, Pedro.